A very good morning, guys. For 2 sessions, the market stood inside a burning building and refused to flinch. Monday, the world was on fire and we still closed down barely 1%. Yesterday, the fire alarm switched off mid morning and the banks came charging through the smoke like the cavalry. This is the Tanmay Edge. You are listening to episode 57. I am Tanmay Kurtukoti. Let's go. So, quick scorecard before we proceed. Yesterday's episode 56 graded 2 out of 5. I called a quiet pinned expiry around 23 200 and sell the rice tape. The market broke the cap, closed above it instead. The one call that paid was the escape. I said it will clear 23 200. The squeeze fuels light up and it cleared. Full scorecard is available on rupeecase.com. Now let's move on to today's tape because the numbers tell the whole story. Tuesday opened soft at 23,259, then slid all the way till 23,104 by late morning, and then the banks woke up. Nifty closed 23,242, up 120 points, up half a percent, a 138 point V shape straight off the low. Sensex closed at 73,919, up 394 points. But the real fireworks were the stocks underneath the surface. The bank index jumped over 2%. The PSU banks ripped 3.16%. State Bank up 2%, ICICI up 2%, Axis nearly 2, Bajaj Finance up 2%, Realty was up 1%, Auto 1.3%. The only thing that was in red was IT, 0.5% down. And the fear gauge, India VIX, collapsed 8.5% to 15.58, and the lowest we have seen in recent times. So, why did the banks catch fire? One word, oil. Overnight, the two sides in the Middle East held ceasefire. The missiles stayed grounded, and the market believed it. Crude that spiked towards $96 a week ago went off the cliff. Brent is nearly to 92 and a half this morning. The American grade is trading at 89 as well. And here is the chain that matters for us. Cheaper oil means a smaller import bill. A smaller bill means a stronger rupee, and the rupee firmed to about 95 and a third. A firmer rupee and a cooler inflation means more room for rate cuts, and nothing loves the smell of a rate cut like a bank. Gold fell to about $41.86, its lowest of the entire season we have seen. When the fear gets sold, this is the hard money is leaving the shelter and walking back into the field. This is a liquidity squeeze that is happening on account of the SpaceX IPO as well as the Anthropic IPO. But here is the twist, and this is the whole episode. The foreign desk did not blink. I went into the official positioning data last night, and through the entire rally, the FIs held their short almost untouched. 2,77,000 net contracts short on index. They covered almost nothing, and they sold another 4566 crore of cash in the stocks. Stacks the desk against each other, and you see a standoff clearly. The proprietary desk, the sharpest money, sits net long futures and long options both ways, and we call long gamma. So they get paid whichever way the move happens. Retail, the other side, the client is long almost 2,04,000 futures and has a return a mountain amount of puts fine at the support, trapped if it breaks, and the FIS is short. Somebody is wrong. Either the FIS get squeezed out, that is the short, we melt up, or they are early and catch the down move that arrives. The DIS institutions bought over 6,000 crore again in the cash market. So let me give you the levels starting with Nifty. On the fresh weekly options that just listed, 23,200 is the line where the gamma flip happens. There are about 45 lakh put contracts stacked at 23,200 and about 35 lakh contracts on the call side, more open interest than any strike on the chain. It is the magnet and the battle line at once. Above it, the option mat turns supportive around 23,350, what the desk calls it the gamma flip level, the level above which the dealer hedging calms the move down and below which it amplifies the move. So about 23,350, the path opens to 23,400 and we rally towards that 23,500 back again, where the call writer sits with 40 lakh contracts. Lose 23,200 and the support gets slippery, because below which the same math flips to amplify the fall, and 23,000 is what we will see likely. So 35 lakh puts are present over there. And one more tell, guys, the PCR simply downside bets versus the upside bets sits above 1 across the chain with IV crushed to under 14. So, translation, premium is cheap. The market is not pricing fireworks, it is pricing a consolidation, and that is what we are looking at. Now, the event that needs to be marked, because yesterday's Nifty expiry is over, tomorrow is Sensex expiry, so we are 1 day DT off on Sensex expiry. The magnet is at 74,000, the single strike that holds most call OI and the most put OI on the entire Sensex chain. Over 11 lakh contracts each at the 74,000 strike. Above 74,500 is the ceiling, the biggest wall where the call sellers have built it. Below it, 73,500 is the support where the put writers are expected to build up the support more strongly. The ATM straddle, the combined price of call and puts, that tells you the market's expected move is around 730 points for the expiry, and the IV got crushed nearly 19% to around 15. So the message from the chain is loud, with volatility crushed and 74,000 the heavily loaded side. The base case in tomorrow is a drift back towards 74,000 and the pinning over there, which gives you the education for today. On the day before expiry, with volatility already crushed and one strike loaded on both sides, buying options is a trap, because the clock and the falling volatility bleeds you, and even if you pick the direction right, the cleaner trade is to sell the premium into the strike. Let the pin do its work and only switch to buying if the price makes a clean, decisive break above that 74,200 mark. Sell the calm, do not buy it. Now the honest risk, and it is real. Last night, US closed lower. The chip stocks gave back their rally. The Nasdaq fell nearly 1%. Asia is red this morning. Korea down almost 3%, Japan down 1%, and our own pre-market is only barely green, trading around 23,270, where Gift Nifty is trading right now. So India is being asked to hold a bank-led bounce against a world that is crashing, and the entire bull case rests on one thing: the ceasefire holds and the crude staying down. If this missile comes back, oil spikes, the rupee weakens, and every leg of this trade reverses at once. So here is the day in one breath. Crude cracked, the banks roared, the fear gauge has collapsed, and yet the FIs would not cover a single short. On Nifty, 23,200 is the line. Above it, lean long towards that 23,500 cap. Below it, respect that 23,000 support where the market should hit in. On Sensex, tomorrow's expiry, 74,000 is the likely pin. Sell the premium into it. Cap is at 74,500. That is where the resistance should take place. So sell on those rallies. Support is present around 73,500, where longs could be taken in. Trade the level, not the opinion. This is the Tanmay Edge. If this helped you guys to see the tape more clearly, share it with one trader friend who needs it right now. Hit the subscribe button so you don't miss a podcast any morning. Stream the full episode free on rupeecase.com and on Apple Podcast and Spotify every trading morning at 8:30. And leave me a rating, guys. I read every single one. I'm waiting for your reviews. Have a happy trading day, guys. See you all once again on tomorrow's expiry.